Finance and stock market explained simply. Your beginner's roadmap. Hey Future Finance Pro. Understanding money and markets isn't rocket science. Think of it like learning a new language. Start with the basics, practice regularly, and soon you'll be fluent. Let's break it down. 1. What is finance? Money management 101. Simple definition. Finance is the art and science of managing money. How to get it, grow it, spend it, and save it. The three main areas. Personal finance, your money, budgeting, saving, investing, paying off debt like credit cards or loans, planning for retirement. Example, deciding whether to buy a coffee daily or save that $5 for a future goal. Corporate finance, how businesses manage money, raising capital funds, investing in projects, managing profits, paying employees. Example, Apple deciding whether to build a new factory or pay dividends to shareholders. Public finance, how governments local, state, federal manage money, collecting taxes revenue, spending on public services like roads, schools, defense, managing debt. Example, your city using property taxes to fix local parks. Why it matters daily. Understanding finance helps you make smarter choices, avoid debt traps, save for emergencies, reach big goals, house, retirement, and feel more secure and in control of your future. It's the key to financial freedom. 2. What is the stock market? The world's biggest marketplace. Simple definition. A marketplace like a giant digital farmer's market where people buy and sell tiny ownership pieces called shares or stocks of publicly traded companies. How it works simply. Companies go public IPO. A company decides to sell shares to raise money. This first sale is an IPO, initial public offering. Example, when Facebook first sold its stock to the public in 2012. Investors buy and sell. After the IPO, investors trade these shares among themselves on stock exchanges like the NYSE or NASDAQ. Through brokers' apps like Fidelity, Robinhood, or Vanguard, prices move. Share prices go up, appreciate, or down, depreciate based on supply and demand. If more people want to buy a stock, high demand, its price rises. If more people want to sell, high supply, its price falls. Example, good news about a company's profits often makes more people want to buy, pushing the price up. 3. Types of investments, your toolbox. Stocks, shares. Buying a tiny piece of ownership in one specific company. Potential for high growth if the company does well, but higher risk if it doesn't. Asterisk example, buying one share of Coca-Cola. Asterisk. ETFs, exchange-traded funds. Like a basket holding many different stocks or bonds. ETC. All at once. Traded like a stock. Offers instant diversification, spreading risk. Example, the SPY ETF tracks the 500 largest U.S. companies. Mutual funds, similar to ETFs, a basket of investments, but bought, sold directly from the fund company once per day at a set price, often actively managed by a professional. Example, a mutual fund focused on technology stocks. Bonds, essentially an IOU. You loan money to a company or government for a set period. They promise to pay you back the original amount plus interest, generally lower risk return than stocks. Example, buying a U.S. Treasury bond, loaning money to the U.S. government. 4. Key concepts. Demystified finance buzzwords explained. Market capitalization, market cap, a company's total market value. Shares outstanding x current stock price. Tells you how big the company is. Asterisk example, A $100 stock price with 1 million shares equals $100 million market cap. Asterisk. Dividend. A portion of a company's profits paid out in cash to shareholders, usually quarterly. Not all companies pay them. Example: if you own 100 shares of a company paying a $1 per share dividend, you get $100. P/E ratio, price to earnings, a common valuation metric. Stock price, earnings per share EPS, shows how much investors are willing to pay for $1 of a company's earnings. Bull market, a period when stock prices are generally rising, optimism prevails. Asterisk. Example: the long period after the 2008-9 crash until approximately 2020. Asterisk. Bear market, a period when stock prices are generally falling, pessimism prevails, usually a 20% plus drop. Asterisk. Example: the sharp decline during early 2020 due to COVID-19 fears. Asterisk. 5. How to start learning your first steps. 1. Consume free, reputable content. Start with websites like Investopedia, Encyclopedia of Finance Terms, and Khan Academy free finance courses. 2. Read beginner books. The Little Book of Common Sense Investing by John Bogle. ETF Mutual Fund Focus. I Will Teach You to Be Rich by Ramit Sethi. Personal Finance Plus Investing, the Psychology of Money by Morgan Housel. Mindset is key. 3. Watch trusted YouTube channels. Look for educators focusing on fundamentals, not stock picks or hype. Search terms: beginner investing, personal finance basics. Shameless plug below. 4. Follow financial news lightly. Read headlines from Bloomberg, CNBC, or Reuters to see what moves markets. Don't get overwhelmed. 5. Use simulators. Practice with paper trading accounts. Fake money offered by many brokers. TD Ameritrade. Webull before using real cash. 6. Practical tips for beginners. Your success mantras: start small and simple. Begin with a small amount you can afford to lose. Consider low cost, diversified ETFs first. Don't try to pick individual stocks right away. Focus on knowledge, not quick riches. The goal is long-term wealth building, not getting rich tomorrow. Avoid hot tips and hype. Build step by step. Master personal finance budgeting. Emergency fund before diving deep into complex investing. Patience is your superpower. Markets go up and down. Stay invested through volatility. Time in the market beats timing the market. Discipline wins. Set a plan like regular monthly contributions and stick to it, regardless of market noise. Automate if possible. Never stop learning. Finance evolves. Make continuous learning a habit. Remember, everyone starts at zero. Feeling confused is normal. The key is consistent effort. You can understand this, and it will empower your life. This explanation is for educational and informational purposes only and is not financial advice. Please consult a qualified financial advisor before making any investment decisions.